Hey everyone, today I'm going to give you my complete analysis process. How I set myself up to win at the start of the week, my entire thoughts right now on Bitcoin, and how to trade them, the exact trades I'll be looking for on both a higher time frame and a low time frame, plus a lot of real day trading strategies that I think will change the way you trade. If you are planning on trading anyway, consider using my link in the description below for VMEX. You can get up to $6,050 as a sign-up bonus, so they're worth checking out. If you like longer videos like this, let me know in the comments below and I'll do more of these in the future. So we're going to start by looking at the high time frames. Always the best place to start because if you don't have high time frame context, you're missing out one of the most important pieces of data you can have for your trading. So bull market, weakened bull market, bear market, and now we're seeing some signs of reversal, and we've just had a key structural break over here. Always talk about this, but market structure really is the most important thing. We're going over it quickly because if you follow my channel, we've done this enough. 25K here was the biggest key structural break, and we also saw a nice reversal over here where we took out a few key levels. Now, in the short term, we are looking at an uptrend. On the weekly, this is a neutral bearish trend. Yes, we're still bearish because, I mean, if you take a Fibonacci level from the top, we've only really come up to the 236, and a move like this, going down, retracing to the 236, continuing, that's not unheard of at all. And if you take a different context, this is the other key move up down to here. Even on this one, we're still at the 382. Both of those indicate a lot of strength. If you don't understand fibs, I'll give you a quick lesson right here. When the price goes up, the fibs just measure the strength of the move. If the move comes down to, say, the 236, then that shows a lot of strength for the bulls. Why? Because buyers stepped in really early and it bounces up. If the price comes down to the 382, buyers stepped in a little later, but it still shows a lot of strength. 0.5, buyers stepped in even later. 0.618, oh, wait a second, buyers, what are you doing? And then anything lower than that, and the buyers are really hesitant and it's not a sign of a lot of strength. So from that perspective, it is by no means a bull market, and anyone calling this a bull market needs to reassess how they analyze trades. Just look in the moving averages, one of the easiest ways to tell which direction the market is going in. We've got the 100 at the top there. We've seen some shift over here. See, this crossover here shows us that the trend is weakening. But the fact that we are still below this 100-week moving average does show that the price is either neutral or bearish. And right now, still bearish because we need to see more sideways action before we go completely neutral. Lastly, we're going to mark out our key levels. We'll go up to about 25K, just because I know that's the level I'm watching. And then over here, about 31.6, 32. This is a bit of a wider area because just below we've got the key psychological at 30K. So between these two is the general zone we're watching. And it's also confluent with this 100-week moving average, which by the time we get there will be a little bit lower around that. So this whole area is looking like a huge supply zone. So let's mark that out. Okay, so be very careful at this supply zone over here. Okay, we've got one big level to watch there, and then big level to watch down here. We've got the 25K level. So both these levels, I expect to see a lot of price movement and some serious action happening. Now, if we go down to here, about 21K, that would be the next level I'm watching after we lose this to come down to here. And finally, we've got the 18K and our previous lows over here at 16K. These are all levels to watch, not ones I care about too much right now because I'll play level to level. Like right now I'm focused on this and the immediate next high time frame level after. So if anything, this is just noise. We don't need to focus on that right now. Let's look above. So say we get above this 31K level, where's the next most probable zone that the price is going to go to? Well, you've got two options you can take. Number one, we've got here around the 36K level. And I like this 36K level because you can see it acting as support here. We can see a quick deviation below here, somewhat of a resistance over here. It's not the cleanest level. It'll clean up on the daily when we zoom into that. So this is a level I make a note of. It looks okay on the weekly, but it'll zoom in a lot and we'll be able to get more precision on the daily. So then the next key structural level is over here. And I'd actually go for 43.3K. over here. You could also argue this high over here. It's significant, but the data is much cleaner here. If you look resistance, deviation, resistance, support, and then one dip below here. It looks a bit cleaner at that level. But again, we zoom in on the daily and we can get our pinpoint levels there. But this gives us a little bit of a structure to deal with. Now we go on to the 1 day. Now we can start looking at swing trades. What are our best swing trading options? So we've got a bull trend in our favor. So the price action is looking pretty bullish here. And then if we take this first move here from the bottom to the top, and we can see a nice 0.5 retracement straight to the 100-day moving average. That's pretty strong, great aggressive bounce. And now price is aggressively bouncing, but chopping sideways and slowly making its way up. If you look, it is showing signs of moving up more. And we have seen some isolated breaks on Ethereum. I do look at cross-asset correlations like that. If Ethereum is looking bullish, often it's a good sign for Bitcoin. If Bitcoin is looking bullish, it's a good sign for Ethereum. But Ethereum as well, it's not looking incredible. It could easily just be an isolated pump and a deviation. So we take a look at this and it's 0.236 retracement, which again, nice argument in favor of the bulls. And we'll get to exact trade setups in a second, but right now I'm just trying to form the foundational logic. Because when constructing a trade setup, and I posted this on my Telegram the other day, and I've done a video on it as well. First thing we do is look at environment. Once we have environment, we start forming the logic. The trend and market structure and news and correlations help tell us the environment, and then we start looking for logic to take different trades. Now I'm looking on the daily, and I can see a couple opportunities presenting themselves to me. If we see a nice breakout over here, which I've been trying to catch for a while, straight into 30K/32K, that's a beautiful play right there. If we see a breakdown from down here over to this area over here, 25K, again, another great play over there. I've got these two plays as the immediate plays. And then the next big opportunity that's going to present itself is when we interact with these levels over here. Now, these will have to play as it happens because it's going to be a great buying opportunity over here. It's going to be fantastic. And there's going to be a great selling opportunity over here. Now, these are going to be harder to play. What I like to do is normally wait for the price to start reacting at this level. Once it starts reacting, it'll form on the lower time frames some form of range. Once that range forms, I'll look for a breakout to the upside or a breakdown to the downside, and that'll be my trigger for the next play. And if I don't get a clean opportunity like that, I can be patient. I'm happy to miss a trade that doesn't give me a fantastic opportunity, and I'll update that as we get to it. So next, I'm going to zoom in to the 4-hour, and now we can start getting pretty meticulous. Zoom in. I no longer really want my moving averages except my low time frame one over here, which I like to use as a confirmation signal. Let's set our key resistance over here, 28.8, very clean. And then we've got support over here at about 26.8, which gives us a really nice range. And then we can also see a really clean midpoint developing over here around the 0.5, which seems to be where price is floating. Mark this separately over there. Okay, perfect. So what opportunities do we have here? Well, swing traders. This is where you get your precision entry. If I'm looking to get my entry above here, I'll be looking at the 4-hour and the 1-hour, and also my entry for the breakdown over here. I'll be less focused on the 15-minute. Now, the other thing I can do is if I'm day trading on the 15-minute, I'm going to be closely watching what the price does, what this moving average is doing, what sort of candle closes we get. Then when we get a couple candle closes, I'll look for the entry. If we get a retest, I'll be paying attention to how we retest because my invalidation might be over here. But if I don't like the way we retest, I might exit a little bit earlier. And I can do this by actively managing the trade after I enter it. The ideal situation is we don't come back down and we go up. And often you find the longer the moves like this go sideways, the more chop we get, the more decisive that final move is, and it doesn't really give you an opportunity to enter. Let me explain the psychology behind that a bit. Right now, everyone looking for the breakout play got liquidated here, liquidated here, liquidated here, liquidated here again. Because remember, this range initially This was the top of the range, about 28.5K. And we had multiple failed breakouts, and that's why I've now moved it up to 28.8K. Because I want more confirmation. Now I'm happy to miss a little bit of an early entry to get that confirmed breakout. And this is how I like to adjust my levels after we get multiple failed attempts. A lot of people don't do this. It works for me, and it's how I view the price data. As theoretically, that's supply down here getting more and more exhausted. And then because of that, I assume the supply up here is going to be a lot more fresh. So now the other opportunities that present themselves to us are day trading opportunities, which often happen on the 1 hour and 15 minute. Now, I don't day trade as much as I used to, nowhere near. But recently, a few students of mine, especially on the Discord, have been day trading and been so successful that it's just motivated me to get back into day trading more and a little less swing trading. So when it comes to day trading here, there's a really easy approach you can take to trading level to level like this. You've got a midpoint, high point there, and a low point here. And you always want to play at the extremities. So extremity, extremity, extremity. When the price is above the midpoint, this is a support. When price is below the midpoint, this is a resistance. So this midpoint here flips, and it's one of the keys to playing this as a day trader. And the hardest thing to actually do as a day trader is know not to trade outside of those extremities. It's literally just knowing that you have to sit for days or as long as it's necessary before you take your trade. Now, in retrospect, it looks really easy. Sell here, buy here, sell here, buy here, sell here, buy here, and then sell there. But it's a lot more tricky. It's a lot more difficult. See, what actually ends up happening is you short here, you set your stop loss here, and you get liquidated. Next time, you short here, you set your stop loss up there, and you make some money, but not that much because your stop loss is so wide, you can't get a decent position size in. And you come to buy here, you make money. Next time, you buy here, you get liquidated on this wick here. Maybe you went hugely into profit, didn't take anything, and then it came all the way back down. The idea is easy, the execution is very difficult, and this is why journaling really well becomes important, because if you journal your trades, if you know what setups you're looking for, if you have systems for moving your stop loss up, for taking profits, if you know how you want the price to approach this level. I mean, one thing I love to use is my Fibonacci levels. So we're going for a buy here, and I decide, let's say, long position, stop loss at this level here, so 1%, decent stop loss, and I'm guessing the price won't go down further than this extreme wick here. And then I target up here. So this is my initial trade, 3.62. It's fantastic. So as it plays out, there are certain things I'm looking for. See, let's give it one more candle. Once the price is done, something like this. Remember what I told you about the Fibonacci and the strength levels? I don't want to see it go below the 382 on this retracement. Maybe the 0.5. Maybe for you, that might even be the 0.618. Test your system. And what this allows you to do is after you enter, here you've already made 2.5R. I'm not going to give up 2.5R that easily. So I'm going to reassess the trade. I'm going to look at it fresh as if I've already made that money. I'm just not just going to set and forget. I'm going to review this. I'm going to look at the structure and think, what level do I like the most? And what I do is I don't actually pick a flat level. I like to look for confluence as well. See here, I quite like the 0.382. Why is that? Because it syncs up with this structural level here before we had the big bounce down. It's just below. So if we just wick down to that and go up, I'm fine. I get to keep my profit. If I end up taking profit here, the original trades ratio is 1.26. It's not a heavy win. It's not bad at all. And what happens there is instead of getting stopped out later, you've managed the position. You've executed it well. Then we see this come down and wicked out. I definitely wouldn't buy here because this did not go up to the previous extremity. And I know if we have a failure here, this is a sign of weakness. So here's another thing I like to look for when playing this. When you see the price bounce, always pay attention to how it bounces. This was a really strong bounce straight into resistance. That means I want to buy the next one. This was a weak bounce into this resistance here, shows structure getting weaker. And then this was a huge bounce smashed through this level. This is a weak choppy move up. I wouldn't buy this. However, given this weak choppy move up and previous structure, we're looking at a decent short opportunity. And remember, this is day trading, not swing trading. So as this plays out now, boom, we've got a great short opportunity. I actually want to make a note of this. One of the hardest bits of this entire move to trade as a day trader would have been right here, because this is a time where you're getting no new significant data and you just have to sit on your hands and not do anything. Not buy, sell, buy, sell, buy, sell. You're looking to trade less and profit more. So this would have actually been one of the hardest areas of this entire range to trade. And that brings us to present day. If someone went for the buy here, held onto it nicely, bounced up, they did pretty well. Now, my other favorite asset to trade right now is Ethereum, because since this pump here, it's actually gotten pretty interesting. Now, I missed the breakout myself because there wasn't confluence on Bitcoin, and that definitely cost me some money because I missed the breakout. Then the other trade I took recently was I actually went for a short over here as we got the retest of this 1850 level. Now, let me explain the logic behind that. If we zoom out, price was ranging between 1720 and 1850. Then what happened is we had a break of the resistance. Price went up, hit 1925 as a resistance, and then started this bearish move down where the structure is pretty clean and buyers are struggling to keep the price up. When I see something like that, I'm looking for a short on the breakdown. So if we just go back a little bit over here, then let's swap to the 1 hour. This looks like a decent opportunity, but there's a few things you need to know. This breakdown back into the range is a weekend move. So this happened on a Sunday. Now, weekend moves, I hate trading. I almost always avoid trading them. And if I do trade them, I will cut my position size down aggressively. Instead of risking 3%, I'll normally risk 1% of my portfolio. And that's my day trading portfolio. Instead of risking 3 or even 4 at a super high aggressive trade, I'll risk 1% of my portfolio because I know that this is not a good move. But I've also got another argument in my favor, which I like, which is that BTC is still in range. ETH returning to the current breakout is confluent with that. Remember, I always look at BTC and ETH. They generally like doing the same thing. And when they do different things, that's a great sign of a lot of stuff. For example, ETH going ahead without Bitcoin often means altcoins are going to start doing well and the money is flowing down the money flow cycle for crypto. So we take a look here and we take the midpoint again, like we did before. And our midpoint is confluent with a lot of data here, around 1784. You can see price is respecting it a lot. And this gives us a potential trade setup. So what would we look for? Short position over here. Logical invalidation would be about 1883. And then our target could be down here for 2R, or we could go super aggressive for the complete bottom of the range, which is about 4R. Personally, I would be a little less aggressive and target 2R over here. Decent trade. Let's see how it plays out. Price goes down, comes straight back up. And if you give it a bit of time, it is now in the red. Now let's talk about managing a trade like this when you're kind of in a loss. Well, the thing is, our argument isn't invalidated yet. Look at the structure. This was our structural level over here, and the price did not break it. It came back up, it did not break it, it hit this level, it bounced again weaker than before. This looks like it could still play out to our target. It's possible it doesn't, and that's not the point. We're not trying to win trades. Even anywhere from 30 to 60% win rates can be hugely profitable. The important thing is winning over 100 trades, not winning one trade. This is why I'm explaining every trade, regardless of whether it's a winner or a loser. I want you guys to understand the mindset of a trader, to think like a trader, to win like a trader. So, I don't know, you can quit your 9-to-5s and have the freedom that comes with trading. You can treat this like a consistent business. You can know the reality and not see martinis on a beach and think that's going to be your lifestyle. This is a fun game. I love coming up with logical arguments like this, managing positions, the thrill of a win, the despair of a loss, and staying stoic throughout all of it. These are the things I love about trading. This is why, even though I don't need to anymore, I still do it. I'll wrap up the video there. Completely different style. Let me know if it was useful, and if you want more like this, I'll do it again.